Welcome to my channel Accounts Accuracy, and let's discuss issue of debentures. Here in this video we will study about issue of debentures, some journal entries related to the debenture issue with some discussion. So let's see what is debenture. Debenture is basically an acknowledgement of debt. Acknowledgement of debt means it's a written document or certificate, you can say, which is issued just to show that the loan, that is debt. Debt means loan provided to the company by the debenture holder. Now, as the debenture holders give away principal amount on the debenture, that means the amount at which they purchase the debenture, that is rupees 100 or rupees 10, or you can say maybe it could be issued at rupees 1000. So the amount at which the debenture holders purchase the debenture is called as principal amount. Now this principal amount given by the debenture holder is given as loan to the company. Why? Because even though they take away the written document from the company, but still they have the expectation of receiving interest on their principal value. They always expect their interest on principal value even at the time of loss. Even though companies suffer loss or profit, it hardly matters to them. They need their interest. So that's why they are considered as the loan providers to the company. Now you see here, debenture may be issued for cash or for consideration other than cash or as a collateral security. Now, for consideration other than cash, that means company acquires another company. Now, if company acquires another company, that means at that time the company purchases or acquire the another company by issuing debentures. That is why it is called as for consideration other than cash. Here company not only acquires the assets of the another company but also acquires the liability of that company. That means if company acquires another company, the company issues debentures for acquiring that particular company. And what is collateral security? That means in any bank, the debentures of the company is kept as mortgage. Here, the debentures are not issued to that bank, but in place of issuing the debentures, the company just keep in the bank as a collateral security its debentures. And till the time the refund is done by the company, the debentures are kept as collateral security in that particular bank. So these are the three ways how debentures are issued. Debentures are issued in return of cash, or debentures are issued for consideration other than cash, that means for acquiring any assets and liabilities of another company. And also it is kept as collateral security for taking loans. Now you must know that debentures are issued at par, premium and discount. Par is the real value, real amount of the debenture. It may be issued at amount more than the par value, or it may be less than the par value, which is called discount. If it will be more than the par value, that is called premium, just like you read in shares chapter. Now, as I told you, par value is the amount at which debentures are issued, that is 100 rupees. And if it will be issued at 110, more than the real amount of the debenture, that means 10 rupees extra will be the premium. And if it would be issued less than 100 rupees, that is, suppose if it will be issued at rupees 80, then rupees 20, the difference will be the discount. Or if 70, then 30 rupees will be the discount. Now the thing is that it can be issued at lump sum value or it is issued at installment. Lump sum means full value of the debenture will be paid by the debenture holder at once. And if it will be paid in installment, then it could be paid with different installments, like this total value 100 will not be paid at once just like lump sum value, but it will be paid in installments. With application, maybe rupees 20 out of 100 would be paid, rupees 40 out of 100 may be paid with allotment value, and then Rest 40 rupees may be paid with first and final call as 20 rupees. So this total 100 rupees will be paid by the debenture holders in 4 installments. It can also be issued at premium. If it will be issued at premium, then you have to remember that generally that is paid with the allotment value. The debenture holders pay the security premium reserve value with the allotment value. That means 50 rupees, that 10 rupees extra will get added with the allotment money. If the debenture will be issued at lump sum, then how the application money will be recorded in the company's books of account. The journal which will be passed for receipt amount of the debenture will be bank account to debenture application account. As cash is received, that full amount of debenture received at once by the company, then with the application form, then that is called the application money, and that amount gets recorded as bank account to debenture application account. Now here what comes in? Debit. So bank will be debited and debenture application will be credited. It will be same as issue of shares. In issue of shares, we were writing share application, and in place of share application, here you are writing debenture application. Now, if the money of the debenture will be accepted by the company, that amount will be transferred to debenture account, and the entry will be debenture application and allotment account to debenture account. Here, the acceptance is given by the company for allotment of debentures. Now, once the debenture is allotted and accepted by the company refunds the extra money of the debenture holders. Like if company has issued 1,000 debentures, but company had received the amount of 1,500 debentures. So here extra 500 amounting debenture money will be returned back to the debenture holders, because company is supposed to keep only the value of 1,000 debentures, not any extra money of the debenture holders. So the money of 500 will be returned back to debenture holders, and the journal will be debenture application and allotment account to bank account. Credit what goes out. Now just understand it better with this example. Here I have taken the sum of lump sum. Lump sum value is received by the company. Here as the company has received lump sum amount on the issue of debentures, then what would be the entry that we have to see? Godrej Interior Limited issued 20,000 debenture, 9% debenture at rupees 100 each, and that was issued at par. Again, applications received for 25,000 debentures. It was required to issue only 20,000 debentures, but the company received the amount of 25,000 debentures. That means 5,000 debenture money needs to be returned by the company. Company has to issue only 20,000 debentures. So extra 5,000 amount of debentures needs to be returned to the company. So how the entry will be passed? Let's see. Here you see. On 1st April, when the money was received, entry would be bank account debit to debenture application and allotment account, that is 25 lakh. How? 25,000 debentures amounting rupees 100 was received. So 25,000 into 100, it will be 25 lakh. Bank account will be debited with 25 lakh and debenture application account will be credited with 25 lakh. But the company needs to transfer only 20 lakh, because company is supposed to issue 20,000 only debentures to the debenture holders, and the entry will be debenture application allotment account to 9% debenture account. This is the transfer entry for lump sum value. That means here at once the whole amount of debentures being transferred to the debenture account, because that was received at once and got transferred at once. Next to that, on 4th April, the rest of the 5,000 amount of debentures will be returned to the debenture holders. So, credit what goes out to bank will be credited. Debenture application and allotment account to bank account. Here 5 lakh, that is 5,000 into 100, 5 lakh will be returned back to the debenture holders. Now we have to see here if the debentures will be issued in different installments. That means it the same 100 rupees amount of debenture will be received by the company in 4 installments, suppose. So at the time of issue of debentures, the amount received by the company with application money will be only rupees 20 suppose. So that is called as receipt entry, and then you will pass the transfer entry. Again the allotment money will be made due, so due entry will be passed, and then the amount of allotment will be received. So two entries will be passed, that is due entry first and receipt entry later. Again with the first call also same thing will happen. Amount of first call will be made due, and then the debenture holders will send the money and company will receive the amount of first call. So due entry will be passed and receipt entry will be passed later. For final call also same thing will happen. Due entry will be passed first and then the money will be received. So receipt entry will be passed. So this is how we do. Just one thing you have to remember, that during the time of application only the receipt entry will be passed first and then the transfer entry is passed. It happens the way we do in shares also. Here, when the money of application will be received, entry will be banked to debenture application account. And when the same amount of application will be transferred to debenture account, the entry will be debenture application to debenture account. When the money is received, debit what comes in, again the same money will be transferred to debenture account. So transfer entry will be debenture application account to debenture account. Next to that, you have to make the due and receipt entry for allotment. So your entry will be debenture allotment account to debenture account for making the amount of allotment due. And when the allotment money will be received, entry will be banked to debenture allotment. It goes like same what happens in shares. In shares, as we only write share application, share allotment, simply you have to replace the share word with debenture word. Everywhere you can see, wherever you are writing shares, there you are going to write debenture. Then the same way call will be made due and the receipt entry for call will be made. It is same way. You have to make the due entry and then the receipt entry. But remember, these two entries are extra shown here, which means when the application money is received but that is received in surplus, that means more than what company actually needs to issue. If company needs to issue 1,000 debentures but company has received the application amount of 1,500 debentures, so extra 500 amounting debentures will either be rejected by the company, or it may be partially accepted, or may be transferred to allotment account. So if that will be transferred to allotment account, that means the application amount of 500 may be transferred to allotment money, and or it may be rejected and full amount of 500 debentures will be returned to the debenture holders. So when the amount will be returned, the entry will be debenture application to bank, and when the amount of debenture will be rejected, then the entry will be debenture application to bank. Understand it better with this sum. Issue of debenture at premium. When the 5,000 debenture of any company will be issued at a premium of 10%. 10% of 100 is rupees 10. So here the debenture par value was 100, but as it was issued at 110, so 10 rupees is the premium amount, and it was paid in installment. That means 20 rupees with application value, 30%, that means rupees 30 at the time of allotment, and rest balance, that is 50 rupees, will be given in first call. So we need to pass the entries for allotment, application and first call entries. You see here, when the amount of application will be received, entry will be 5,000 into 20. That means 5,000 debenture of rupees 20, which is the application money. It was to be given in three different installments, that is 20 rupees with application, 30 rupees with allotment and 50 rupees with first call. So 5,000 into 20, 20 rupees which was expected to be received at the time of application. So the amount will be 1 lakh. This is the amount which is received by the company with the allotment. So here you can see that is the amount of application money which the company received. Next to that, the same amount will be transferred to debenture account and the entry will be debenture application to debenture account. Then we have allotment. For allotment, it's the same way you will make the allotment money due, and as we pass the due entry, it's debenture allotment to debenture account. And this was already explained to you that security premium reserve, if any premium lies, that is made due along with the allotment money. So two securities premium reserve will be also made due at the time of allotment. So the amount of allotment was 2 lakh. Why? Because 30 rupees was allotment value and 10%, that is premium value rupees 10. So 30 plus 10, the premium amount makes 40. So 40 rupees will be made due at the time of allotment, and debenture will be made due for 30 rupees only. So that will only be shown with the debenture account. So 5,000 into 30, that is 1,50,000. And with securities premium reserve was 10 rupees. So that's why it will be two securities premium reserve 50,000. As you know, all the incomes and gains needs to be credited. So securities premium reserve will be credited. Here you have to remember that debenture allotment money will be made due for 40 rupees. Why? Because this 40 rupees is also including the amount of premium, that is rupees 10. So 30 plus 10, that is 40 rupees will be written with the allotment amount, and for debenture account it will only be rupees 30. There is no difference. Same way as you were doing issue of shares, same entries will be passed for debentures also. Then the receipt entry for debenture allotment will be passed, that is bank account to debenture allotment account, 5,000 into 40, because full amount along with the premium value will be received by the company with at the time of allotment receipt. So bank account to debenture allotment account, here 2 lakh, 2 lakh. Only one thing you have to remember, whenever you are writing the amount of debenture account, it should be the face value of the debenture. For debenture, always remember we only multiply with the face value of debenture. Here the application face value was rupees 20, so we multiplied with 20 rupees. Again, at the time of allotment, for debenture account, we have multiplied with the face value. Wherever you will write debenture account, you have to remember that should be only with the face value of debenture. Next to that, we are supposed to make debenture first call due, and that would be 5,000 into balance 50 rupees, because 20 plus 30 makes 50. So rest 50 of 100 will be made due at the time of first and final call. So it will be 5,000 into 50 rupees, that is 2,50,000, and this is made due for debenture account. It will be 5,000 into 50, that is 2,50,000. Debenture first and final call will be made due by passing this entry by making debenture first and final call due, first and final call debit, and crediting debenture 8% debenture account. Then the receipt entry will be passed, that is bank account to debenture first and final call account. What comes in debit? And here it will be 5,000 into 50, that is 2,50,000. So I don't think it was difficult for you to understand this, because in this there was nothing as such to read new, because only what you did in place of shares you wrote debentures. All the entries you have already done at the time you read the shares chapter. So for debenture there is no difference, only in place of shares you have to write debenture for each and every entry. And one thing you need to remember, that at the time of application, receipt entry will be passed first and then the transfer entry will be passed. For rest all other installments, due entry will be made first and receipt entry will be passed later. It's same as shares, so there is nothing new to be read. Still, just for practice, I made you understand. Still, you need to practice few sums of debenture. I hope the video was beneficial for you. Please don't forget to subscribe my channel and hit the big fat like button. Thanks for watching.